Cybersecurity firm CrowdStrike is one of the fastest growing companies on the market. Revenue has grown from roughly 120 million in 2018 to over 2.6 billion over the last 12 months. And that has taken the company to a valuation today of $39.7 billion. With 3.2 billion of cash on the balance sheet and 740 million of debt, the enterprise value is 37 billion. This is clearly a well-run business operating in a resilient industry. CrowdStrike has generated 551 million of ebitda and 842 million of free cash flow over the last 12 months. Annual recurring revenue shows a trend that any business would be envious of. The company also boasts a net retention rate of 125% and strong gross margins of 74%. Those margins have improved steadily over time. Based on company guidance, CrowdStrike should clear 3 billion in revenue in fiscal 2024, which is 35% more than last year. However, the year before that, growth was 54%, so you can see by this table revenue growth has been declining steadily, and CrowdStrike is yet to produce a full year of profits. When you adjust for a large amount of stock-based compensation, almost 600 million, net income over the last 12 months is negative 93 million. It's also worth noting that CrowdStrike spends a lot of money on sales and marketing to achieve that growth, around 40% of total revenue. Overall, CrowdStrike is one of the fastest growing businesses, but it's also one of the most expensive, trading at 14 times revenue and 44 times free cash flow. Let's assume that CrowdStrike grows revenue 35% in 2024, 30% in 2025, and then 25% for the following 3 years. That would put revenues at roughly 9 billion in 5 years' time, and a net income margin of 22% would suggest roughly 1.9 billion of profits. Apply a 30 times multiple to that and you get a valuation of 57 billion, which works out to an investment return of 7.5% a year. That's not a very good return for what is quite an optimistic forecast. And there is a lot of competition in this space, including Microsoft, SentinelOne and Palo Alto. To justify the current valuation, CrowdStrike needs to continue its impressive growth, but there is hardly any margin of safety here. That said, I would never short such a fast-growing business. That's why I give this stock a neutral rating. But these are my personal opinions, not financial advice, and I've got no position in CrowdStrike stock. For more detailed investing ideas, make sure to visit our website overlookedalpha.com.